Hello everyone. In today's video, we're going to talk about some of the changes FHA has made to make it easier for you to qualify for a home mortgage if you have student loans. So if you do have student loans, you're going to want to watch this video. Recent changes to the calculation of your student loans may make it easier for you to qualify for a mortgage. Hi, this is Paul Anderson with Primary Residential Mortgage, and today I'm going to tell you about some recent changes that have happened that may make it the right time for you to buy a home. The Federal Housing Administration, or FHA, has made changes to its student loan calculations that should make it easier for student loan borrowers to obtain a mortgage. Now, prior to these recent changes, FHA required a mortgage lender to calculate the monthly payment for deferred student loans at 1% of the total outstanding balance on the loan, the monthly payment reported on the borrower's credit report, or the actual documented payment, provided that that payment will fully amortize the loan over its term. Now, today borrowers have many student loan payment plan alternatives that are offered by the U.S. Department of Education. These plans include variable rate amortization schedules based upon your income. The restrictions that FHA did have in place did not allow mortgage lenders to include these payment alternatives, and often it kept borrowers from being able to qualify for a mortgage because of the higher debt to income calculation. Now, FHA has adjusted their policy, and this has allowed us to calculate the monthly obligation of your student debts differently. So these changes are going to allow borrowers who previously could not qualify to perhaps now qualify for a mortgage. Let's look at a simple example. Let's say you have $100,000 in outstanding student loans and you have an income of $60,000 per year. You may only have a student loan payment of $245 a month under approved income-driven repayment plans. Under the old FHA policy, as a mortgage lender, we would have to assume that you actually have $1,000 per month due to FHA's longstanding underwriting policy of applying 1% of the outstanding balance, even though your payment is actually $245. And this could prevent you from getting a mortgage depending on your overall credit profile and your other debt obligations. The great news is that the FHA policy that took effect in August, it adds a student loan section and it amends that previous calculation rule. The new FHA policy will allow mortgage lenders to use the borrower's actual monthly student loan payment amount, even if it is below the traditional amount of 1% of the total balance. And if the student loan borrower's calculated payment is zero, which is possible under an income-driven repayment plan, the mortgage lender will automatically apply 1/2 of 1% of the outstanding student loan balance as an assumed payment rather than the 1%. That's half of what we had to use before. The new policy will make a big difference for individuals throughout our nation and is another step to promote equity and opportunity for home ownership. So, if you have student loans and were not able to qualify for a mortgage before, be sure to check with a licensed mortgage lender to find out if you qualify for a home loan under this new rule. Home ownership is the cornerstone of the American dream and is the best way to build generational wealth.